Look, even with the new wave of shutdowns looming, investors have actually been shorting volatility because the markets have been remarkably calm and copacetic. Look at the VIX index. This is the fear index. It gives you an indication of how much fear is in there. Well, we're actually down for the month so far, 39%. There's really been no fear, but even other VIX products like PROSH's Ultra VIX short-term futures, which provides leveraged exposure to the S&P 500 VIX short-term futures, that's even worse because, we haven't seen any volatility, down 42%. But let's bring in our traders, Tom Hayes and Phil Flynn. Tom, low volatility, but should investors still have their guard up? Because I'm looking at an inverse one. There's SVXY, and that is a short VIX, right? You bet that it's not going to do well. And so to me, this is a very interesting play here, but you got to be careful, right?
Yeah, well, the VIX is still elevated, Liz, above 20. So if you really want to look for tops or where to get extremely defensive, you'd want to look below 15. So we still have a wall of worry that we can climb. As Warren Buffett likes to say, in the short term, the market's a voting machine. In the long term, it's a weighing machine. And right now, we're having some turbulence because of the voting, the situation with COVID case spikes, the shutdowns going on around the country. But in the long term, we can look at earnings growth next year is going to be well over 22%. And that's probably underestimating the possibilities that we have. GDP growth is going to be 5 to 6%. So you have to look through the short term. And if you recall, on the Friday before the election, I was on, and the market was down about 900 points. And I said, Liz, this is a rotation, not a liquidation. And we said that we wanted to get involved in banks, we wanted to get involved in defense stocks, and we wanted to get involved in energy. Since that time, banks are up 24.5%, defense stocks are up 26.5%, and energy stocks are up 34.5%. We still like these looking out 6 to 12 months. On the bank side, we like Wells Fargo, Bank of America, Citibank. The net interest margin is increasing from the yield curve steepening. The reserves are going to come down. On the defense stock side, we like GE and Raytheon. And on the energy side, we like Exxon and we like Kinder Morgan. So there's still a tremendous amount of opportunity. You may get some short-term turbulence, a few air pockets, but you won't have to put on that oxygen mask, Liz.
But Phil, at some point, somebody's going to step on the market's air hose, and we're going to start to see the bears come in. What is the defense there that you say is the great play for people who might right now look at the markets and say, well, look at this resilience. I mean, the Dow had been down 210 points this session alone. We've climbed back up. We're about 2 points to the upside. We could go negative again. I mean, but it's not the worst picture of the day.
No, it's not. I'll tell you what, the VIX has come down pretty dramatically because a few months ago, we were so freaked out, before the election, that everything was going to fall apart, that we're going to shut down the economy. They're shutting down Europe. It looked like the final scene of Animal House, whatever he was running around, run, sell, buy, and now the VIX is starting to come down because we are getting some answers to some questions. And listen, if you look at today's data, Liz, it was very encouraging. Even though the weekly jobless claims, weren't great, the continuing claims, were getting better, and the housing number was absolutely explosive, right? I mean, this is incredible. First-time home buyers jumping in the market, unlike anything we've seen probably in many years. 30% of the new buy, no distressed buyers in there. So that shows a very, very solid recovery. So I think if you get back to the fear, right? Usually, you get the biggest surprise when you're not looking for it, right? That's when you're getting your biggest spike in the VIX. But all of these fears we've seen. But I'll tell you right now, it sounds like they're talking about getting a stimulus deal. If they start getting close to that, that might be the component that's going to really, start the Santa Claus rally.
Well, you know what? Congress has to act if it doesn't want Main Street to fail. We're hearing it in all of the cities we all live in, that there are restaurants that are going out of business, and the domino effect is just horrific. So we need Congress to start doing something here and get it together. Tom, Phil, great perspective. Thank you very much. Move over Airbnb and DoorDash.